Welcome back to our channel Accountancy. In today's video, we shall comprehend that how to make a journal or how to pass journal entries. And as per modern classification of accounts, there are basically 5 heads of accounts. These are capital, assets, liabilities, expenses, and income or revenue. So before we start our illustration, let's recall the rules of debit and credit. When assets and expenses increase, we make a debit entry, and when assets and expenses decrease, we make a credit entry. On the other side, when liabilities, equity and revenue increase, we make a credit entry, and when liabilities, equity and revenue decrease, we make a debit entry. We have already discussed the rules of debit and credit in details in another video. The link of the video is given in the description box. Now we see how we define a journal and what is the format of a journal. The first book in which the transaction of a business unit are recorded is called a journal. Now look at the format of a journal. At the top, we write the name of the business unit. A journal is usually divided into 5 columns: date, particular, ledger folio and amount, that is debit and credit. Here date column represents the date of the transaction when it took place. Particular column represents account title and description about the transaction. And the ledger folio column is not filled when the transactions are recorded in the journal. So we have nothing to do with ledger folio at this stage. Finally, debit and credit amount is recorded in amount column. Currency symbol is also mentioned at the top of the amount column. So let's start our illustration. Mr. Sam is a computer merchant. He started a business under the name of Computer Hub. Here is a list of transactions which occurred during the month of January 2020, and we are required to pass journal entries for the given transactions. On January 1st, 2020, Mr. Sam started a business with rupees 1500,000 in the bank and rupees 100,000 cash. Now remember that when the owner of a business unit introduces new capital into the business, we debit the amount invested in the business and credit capital account. So the journal entry would be January 1st, 2020, bank account is debited by 1500,000, cash account is debited by 100,000 and capital account is credited by 1600,000. On January 2, he bought furniture for rupees 300,000 in cash from Modern Furniture House. Here furniture is an asset for the business, and when an asset comes into the business, it means that asset increases. So we debit furniture account. At the same time, cash goes out of the business or cash decreases. So we make a credit entry for cash. So the journal entry would be January 2, furniture account is debited by 300,000 and cash account is credited by 300,000. It is worth noting that when money is paid or received at the time the transaction took place and business unit name is also given, we don't have to mention the name of the business unit. We just pass journal entry with cash account or bank account. On January 5, Mr. Sam purchased on credit 10 computers from High Tech Computers Limited and cost of one computer is rupees 70,000 with the condition 2 by 30 and 60. Now keep it in your mind that Mr. Sam is a computer merchant, so the purchase of computers will be treated as an expense, and we know that when expenses increase, we make a debit entry. On the other hand, purchases are made on credit, which creates a liability for the business, and when liabilities increase, we make a credit entry. Here you must be able to distinguish between capital and revenue expenditure. A detailed video about capital and revenue expenditure is available on our channel, and the link of the video is given in the description box. So the journal entry for the transaction would be January 5, purchases account is debited by 700,000 and high-tech computers limited account is credited by 700,000. And remember that whenever a transaction is on credit basis, we always mention the name of the business unit. Here a condition is also given, that means High-Tech Computers Limited offers 2% discount if Mr. Sams make the payment within 30 days. Otherwise, full payment is to be made in 60 days time period. On January 10, Mr. Sam received an invoice of rupees 20,000 for carriage inward from Skyways Corporation. Skyways Corporation performed the service of transporting computers from Lahore. This transaction is treated as a carriage inward. Carriage inward is an expense for the business, so the journal entry would be January 10, carriage inward account debited by 20,000 and Skyways Corporation account is credited by 20,000. As the payment to the Skyways Corporation has not yet made, it is still a liability for the business, and when liabilities increase, we make a credit entry. On January 18, Mr. Sam sold 6 computers at the rate of 85,000 each with the condition of 1 by 15 and 30 2 Galaxy computers. So when the goods are sold on credit, we debit debtors account and credit sales account. Debtors are treated as a current asset for the business, so the journal entry would be January 18, Galaxy computers account is debited by 510,000 and sales account is credited by 510,000. As sale generate revenue for the business, and when revenue increase, we make a credit entry. On January 22, Mr. Sam paid rupees 20,000 to Skyways Corporation by check. So this transaction indicates a decrease in liability and also a decrease in an asset. So the journal entry would be January 22, Skyways Corporation account is debited by 20,000 and bank account is credited by 20,000. On January 25, Mr. Sam received a check from Galaxy Computers and allowed them a discount of 1%. Here Mr. Sam received cash from Galaxy Computers, and we know that cash is an asset for the business, and when an asset increases we make a debit entry, and discount allowed is an expense for the seller, and when an expense increases we make a debit entry. On the other side, debtors are treated as an asset, and when an asset decreases we make a credit entry. Now keep it in your mind that receiving a check from the customer is treated as a cash transaction, and when a check is deposited into the bank, we debit bank account and credit cash account. So the journal entry would be January 25, cash account is debited by 504,900. Discount allowed is debited by 5,100, and Galaxy Computers account is credited by 510,000. On January 29, Mr. Sam paid to High-Tech Computers Limited by check and received 2% discount. Now, payment made by Mr. Sam to High-Tech Computers Limited decrease the liability of the business unit, and we know that when liabilities decrease we make a debit entry. On the other hand, Mr. Sam received 2% discount on the payment. Here, discount received is treated as a revenue for the business. Moreover, the payment is made through check, which decreases bank account, so we credit bank account. So the journal entry would be January 29, High-Tech Computers account is debited by 700,000. Bank account is credited by 686,000, and discount received account is credited by 14,000. On January 30, he paid utility bills for rupees 10,000. Utility bills are treated as an expense for the business, and here we assume that payment is made through check. So the journal entry for the given transaction would be January 30, utility expense account is debited by 10,000 and bank account is credited by 10,000. And that's all for today. Thank you for watching. Stay blessed.